Guys, welcome back to Zodiac Trading. So today in this episode, we're going to talk about the First Republic Bank. So we're going to talk about the banking crisis. Is it going to deteriorate, or is the FRC, the First Republic Bank, is going to bankrupt? And what does this bank crisis indicate? What does that mean for normal investors? I will cover mainly all these three parts in today's video. So right now, let's look at the First Republic Bank, FRC. Um, back then we had the SVB banking crisis because the Fed has been raising interest rate uh, very aggressively to their top priority is to tame the inflation back to 2%. But obviously, right now, we can still see that U.S. inflation is still at somewhere around 5%. So we still have 3% to go. So the Fed can actually tame the inflation back to 2% and resetting the financial order in more of a stable fashion. And then the inflation is very important because if you have very high inflation, that actually hurts the real economy system. So you kind of want that inflation to be maintained and to be tamed at a certain level. So the inflation wouldn't be too high. If the inflation is too high, that would be in hyperinflation. If the inflation is too low, you'll be having a disinflation, or maybe you will start having, for example, like deflation, like what's happening in Japan. So you definitely don't want that happen in the real economy. So the Fed is making very difficult decision, but at the same time, when you are raising interest rate, it will kind of hurt the banks. It will hurt the bank stocks value. At the same time, it will hurt the banking industry's business model. So here I'm going to explain why. Because as we all know, the banks are actually making money out of the difference among interest rates. So basically, the banks they are able to use depositors' money, and given these depositors a very insignificant amount of return, but in exchange to use their capital to make good investments, and they can make the percentage back. They can make the money back from their loans. They can make money easily if the interest rate remains low. So during the QE phase, we have lots of financial institutions making a lot of money because the Fed allows the interest rate to be traded at nearly like 0%. So that means the banks doesn't have to pay its depositors back. So when depositors they are putting their money in the bank, they understand there won't be any return, okay, out of saving. So, but now because the interest rate has gone so far, the interest rate has gone from 0% to right now quite a very high percentage right now. The investors and also the depositors they are expecting certain amount of return when they are trying if they are depositing money, they want the yield, they want the return be higher than the real world interest rate. So think about this. If you are a depositor in the First Republic Bank, you'll be thinking about, can the bank provide me with higher yield? Can the bank actually pay me for depositing my money? So that would be the question you're going to ask, which is a very different question when you're in the QE phase. Because in QE, in the QE era, when you look at all the asset prices and bubble, you look at stocks, you look at all these different vehicles, you'll be like, I I don't care about the saving rate. I don't really care about if the bank can provide me with a certain return. The only thing that I care about is the safety. And then you have endless liquidity in the financial market. That means there will be booming stock price. There will be a lot of bubble. There will be a lot of unicorns. People make money here. People make money there. So it wouldn't bother you because you will think about, okay, what if I put my money, my hard saving into investing? I mean, you could be ending making so much more money compared to just leave it at the bank and deposit in the bank, right? So that would be the problem. That will be the key difference. Right now, it's QE. We are ending the QE right now. The Fed has ended the QE. It's not going back to easing in the short term, I believe. And then you're going to have systemic issues and structural issues, and for the banks. And also, they are in extremely difficult struggle because the entire business model has changed, right? Right now, they have to pay their depositors. So the depositors not just thinking about is this safe if I put my money in the banking system, they also ask other questions as well. And as the consequence, you will end up seeing a huge amount of capital outflow. You will start seeing depositors taking and withdrawing their money out of the banks. And once you see that happen, once you see that, they wouldn't call this bank run because right now still some depositors, some investors are very positive of FRC, but still, given the size of this capital outflow, it's kind of worrying for depositors as well because they have seen the SVB, what happened with the SVB, and then these depositors, they understand if they put their money inside of the bank, they are not going to make any good and attractive return out of it. So that's the reason why they just kind of get the money out. So when you're taking that money out, you're kind of essentially killing the banks, right? Because the banks are not capable of using your money to make or to arbitrage the interest difference. So that's kind of destroy the bank's business model. So as we can see here, the First Republic shares have plunged 93%. So we're going to see, well, right now we're seeing that FRC is trading at $8, which is one of the historical low. And I think for normal investors and uh, traders, actually, I think the FRC kind of issue it gives a very strong warning that the current banking crisis is not over yet. Yes, we have heard that from Jamie Dimon, the JP Morgan CEO, and he said during his in his annual letter to shareholder that say he explained and defend their position as a banker because they say there is no possible way that banks can get benefit out of this situation. And then he said he also mentioned that the repercussion of the current crisis would take years to come, and it will just become like a continuously long and painful process for the U.S. banking sector. Okay, so for JP Morgan, they have good year. Okay, so you can well, it would be ridiculous to judge Jamie Dimon if he's a bad CEO, but I would say he's quite a hypocrite because the bankers actually get a little bit of compensation out of this, not the bank, but the bankers. Okay, given the modern corrupted corporate ladder system. So Jamie Dimon, in a sense, he's right, but in the same time, I think we should be very cautious of who he is. Okay, so I guess the FRC issue actually bring investors a curious, I would say, a question of the banking sector in U.S. Is it worthy of investments? Can we invest in can we invest and actually buy the stocks right now to be honest, I don't think it's a good idea to long any kind of financial stocks at the moment because, I know a lot of people are betting on that, Fed will lower interest rate and Fed will continuously easing. But the point is, the Fed's priority is to tame inflation back to 2%. Right now, the inflation is 5%. We still have 3% to go. So I don't think there will be any solid reason to behind these back to easing kind of statements. So I figure that we will still see we will still have rate hikes in May, and I think that's for sure because the Fed has to at least they have to fulfill their priority, their prime goal. So I don't think the interest rate will go lower. I actually think the interest rate will go up higher, will end up higher, like 25 basis point higher. And that is going to further destroy down of the root of the banks. But I have saw there is one of the legal charge towards the FRC. Even some star investors claim that FRC is okay, it's a solid bank. But still, there is a lawsuit about the FRC actually having these, I would say, a false auditing financial report, and in the court, they claim that the KPMG was auditing false information, giving false audit report to actually make the FRC look good in terms of financial report wise. So I think there's still a lot of unknown factors for us. So we better be cautious and see how the FRC would react, because right now the FRC had, like on Monday, it had 104.5 billion of deposit, down by 72 billion by 3 months. That is, I would say, that is terrifying, right? You never see these amount. I would say huge amount of capital outflow, deposit outflow out of a bank. Even though you might be a good bank, but still, no, I don't think any bank is able to take that kind of heat. Okay, so if there is anything about FRC come up, I will continue to make video. And actually, I think this is a good topic to talk about because banks and big financial institutions, they are very complicated. They are very complicated essentially because it's difficult to look at their balance sheet, and it takes years of experience. It takes very deep efforts to understand what's inside and how the banks and insurance company actually operate. So I think that would be a very interesting topic, so we could just examine how this banking crisis will unfold and how this level of crisis could be intensified. So right now, that's just wait and see. From my opinion, I think the banking crisis is not over yet, and FRC is not the right time to buy and hold the stock. And I used to think yes, but right now I've changed my perspective on the FRC. And also I've changed my perspective on other financial institutions related stocks as well, because I think the interest rate will go up higher to further tame that inflation. So we're going to see a lot of banks going to suffer because they actually pay more and they actually spend more money to get these capital, to get these deposits. In the QE time, it's very easy to get depositors depositing a huge amount of money in your banks. But right now, as the interest rate just go up, you'll start seeing people withdrawing their money because they're in short of capital. They are in some business trouble, and you see shrinking demands of the market and so on. So it's just a bad time to long any kind of financial stocks, especially insurance company. So thank you guys for watching. If you like my content, please subscribe and click that bell button for me. You can also communicate with me in the comment section below, or you can also join our Patreon to support me, because your support is really it's your support, it's all that matters, that really encourage me for making more and more useful and valuable videos. So thank you guys. I will see you in the next episode. Bye.